Dear students, we'll study about deemed profits chargeable to tax as business income under profits and gains of a business or a profession, which is said in section 41 of Indian Income Tax Act of 1961. So what are the deemed profits chargeable to tax? Right, there are different kinds of deemed profits. Apart from the actual profits, there are deemed profits. So what are those? We'll study those things. The first kind of deemed profit is recovery against any allowance or deduction allowed earlier. Right, if any recovery is there which is against any allowance or deductions, or recovery against the deductions allowed earlier, which is said in section 41 subsection 1, those things are called as deemed profit. Right, first kind of deemed profit. Now recovery by the same assessee, when the recovery has been made by the same assessee, has been done by the same assessee, where an allowance or a deduction has been made in the assessment for an year in respect of the why they have made the recovery by the assessee, because of loss, because of expenditure, because of trading the liability incurred by an assessee, and subsequently during the previous year he has obtained, whether in cash or in kind, in any other manner, whatever, so any amount in respect of such loss, expenditure, some benefits in respect of such trading liability by way of remission or cessation therefore. So now if you see, if any remission he has got, or he has got any kind of amount of such loss or expenditure, in that case recovery by the assessee, by the same assessee, would be called as the recovery against any loss or a deduction, and that is called as the deemed profit. Right, the second is, in this second B point, is recovery by the successor in business or a profession. Now in this case, as in the last case, the person has suffered loss, expenditure or trading liability incurred, and the amount he received for such loss, expenditure, right, or some benefit he received in respect of such trading liability. But here recovering by the successor in the business or a profession, which means any amount in respect of which loss or expenditure was incurred by the predecessor, or some benefit in respect of trading liability referred in clause A above by way of remission or cessation therefore. So here, that means if they have suffered any loss or anything which is done by the previous businessman, and now the business has been sold to some agency, the amount obtained by the successor in the business, the person who obtained it, maybe it is the children's, maybe it is the third party, the value of the benefit accruing to the successor in the business shall be deemed to the income under that profits and gains from the business or profession of the successor of the previous year. Okay, so if you sell your business, or if some person has died, let us think that the owner of the business has died, so he was the real preceders, right? So we can call that he was the real owner. Now when he died, his business has been transferred, his business has been sold out, or his business has been moved from the real owner who died to some third party, right? Some third party. The third party was the children, the son. Now he is the successor, so he has to pay that particular taxable income, because those things for him it is a deemed profit. For the child or that son, the business, whatever the income has transferred, for him it is deemed profit and he has to pay it. Similarly, some person will sell the business to someone, and after selling the business, maybe before selling he has not paid the tax of the current year. After selling the business, the person who bought it, right, who purchased those things, he is the real successor. Now he has to pay the tax, because for him it is also a deemed profit. It is not actual profit for him. Already somebody else has earned the profit, now he is going to pay that profit. So a recovery by the successor in the business or a profession. The second main point is balancing charge on asset of undertaking engaged in generation or generation of distribution of power. Okay, if somebody is generating the power, or if somebody is engaged in generation or generating of distribution of power, where which is owned by the assessee, the condition which they told about building machinery or plant or furniture, about which is owned by the assessee, in respect of which depreciation is claimed under section 32 subsection 1, which was or has been used for the purpose of business. Okay. Now, is sold, declared, demolished or destroyed, and the money is payable in respect of such building, machinery, plant or furniture, as the case may be together, which the amount of scrap value, if any, exceeds the written down value. Now, right, if the machine or anything has been become scrapped, or it is obsolete, which is not fit for use, in that case, if the scrap value is exceeding the WDV, written down value, then so much of excess as does not exceed the difference, the actual cost, and the return value, shall be chargeable to income tax as income from the business of the previous year in which the money payable for the building, machine, plant or the furniture becomes due. Okay. Now here those all things are related for building, machine and plant or furniture. If it becomes scrap, if it is more than the WDV of the business, and there it is chargeable for income from business. Similarly, profit on sale of capital asset under use for scientific research. If any sale you have done for the capital assets which have been used for scientific research, right, where the capital assets research, it is being sold, and those are giving you some revenue, capital you are getting out of it. Such all things which is less is chargeable to tax business income, and in which is the sales took place, right, in whichever year the sale has taken place, those things should be treated as business income. Similarly, recovery out of bad debts allowed as deduction. Now some bad debts were there, they were allowed as deduction in the previous year, and the amount you thought that it cannot be recovered. So here, but the debt is greater than the difference between the debt and the deduction, right? The debt amount is greater and the deduction amount is less. The excess realization is chargeable to tax because it is income for the business. The realization you made was more, but the actual thing is less. So the excess realization is chargeable to tax for the recovery of bad debts, allowed as deductions. So you allowed those bad debts as deduction in the earlier, now you thought that this is not going to be correct. Amount withdrawn from special reserve created and maintained by a certain financial institution. So here you can see that where a deduction have been allowed in respect of some special reserve, some special kind of reserves are there. This is not like normal general reserve or capital reserve, no. These are the special reserves which are created and maintained as per section 36 by certain financial institution and banking companies and cooperative banks. They give for the specific purpose, and by taking this particular money withdrawn for specific, the profit whatever you get or the deemed profit and gains of the business or of profession whatever you are getting, this is amount withdrawn for specific or special reserve, and it is created and maintained by the certain financial institution. Similarly, adjustment of loss. If anybody is adjusting any loss of the previous year, or if anybody is adjusting any loss of the carried forward loss of 8 years, right, the loss can be carried forward after, actually the general loss cannot be carried forward up to 8 years, right, like loss is there when you do set off of losses, whether a set off of the business loss is there or capital loss is there or any other loss is there. Whenever you take about a business loss, you can carry the business loss till the 8 preceding financial years, right, till 8 years you can forward it, but there are certain rules. Now general loss of business cannot be carried forward up to 8 years, till 8 years you can't do it, before that you have to set off. And exceptions is there, means beyond 8 years also you can do, but there is an exception to this rule which is provided in section 41 subsection 5 of Indian Income Tax Act. It says the exceptions is applicable for the following conditions are satisfied. If these conditions are satisfied, then we can carry forward the loss beyond 8 years. So what are those? The business or profession is discontinued. The business what you are doing or the profession what you are doing is totally discontinued. Similarly, the loss of such business or a profession pertaining to the year in which it is discontinued could not be set off against any other income of the year. Right? The loss what you are doing, it cannot be set off against the business income of the year. Similarly, such business is not a speculation business. Right? The trading business, speculation business, it should not be. Then after discontinuation of such business or a profession, there is a receipt which is deemed as business income. Right? If these all points are present, then you can do adjustment of loss even if it is carried forward up to more than 8 years. These are exceptions applicable. 7. This recovery after discontinuance of business or profession, which is said as per section 176. Whenever a business has been discontinuance or there is a recovery after discontinuance of the business is going to recover. So the recovery of any sum in case of discontinued business, right? In a year, any sum received after the discontinuance shall be deemed to the income of the recipient. So that will be the income of the recipient. You should treat it as income of the recipient and chargeable to tax accordingly. Similarly, income of any sum in case of discontinued profession. If any income is there, recovery has been made in case of discontinued profession, so that also will be treated as the business income or deemed profit income.